Hello, guys, and listen, welcome to the show. Today is Thursday, May 24th, 2018, and let's get this show started. I'll tell you what, let's get the charts going right here. Now, here's the thing. The first thing we're going to look at is the silver price today. She's riding high on the high side of this low range. I call it low range. This is the range down below the $17 range. It's very possible pretty soon it could go back up into the $17 range where they get ready to smash it back down again. But it's riding on the high side of this range, so it's looking good. I like to see it on the high side of the $16 range rather than around $16.20 or whatever. I like to see it around $16.57. It's holding strength. This is a very stable market as of late, you know. I see it personally as a great place to put your money because I see stability in it, and I don't see it going down too much lower. Your downside risk is awful small. Like, where do you store your money nowadays? The people who are storing their money, honest to God, in the U.S. Treasuries, they are going to get burnt so bad. You know, they bought in at around 3.1% on the U.S. 10-year. And it's fell back down below. Well, I'm not going to give it away because I'm going to go there in just a couple minutes. But they're probably feeling pretty secure this morning. They bought 10 basis points higher than it is right now. They bought in, you know, and they're probably feeling pretty secure right now about their purchase. Let's see. Let's go to the Bitcoin market today, and we've been seeing a hard time for Bitcoin. But don't fret, guys. Don't fret. You guys have invested in Bitcoin. Because I remember the last big crash we had. There was much more volatility and the downward moves were much greater percentage-wise than this crash. This crash is showing much more stability in the price of cryptocurrencies than the last crash, which shows me how the base for cryptocurrencies has expanded. So, like, if I was a doctor and this was cancer I was looking at, I would see a much more powerful base, and I would say to the guy, hey, you know what, you're terminal. Because this cancer's got a much better hold on you than it had last time. In other words, if the growth of this cryptocurrencies is like a cancer in the financial system. And now it's got a much wider base of growth that it's working from, and the price has got a much more stable. It's staying at 7,500 this morning, and a lot of people are disappointed because it was like 19,000, and they're like, oh, you know, but you got to understand something. There was a time not that long ago when Bitcoin was $200, where $7,500 would be a monstrous achievement, you know, for cryptocurrencies. So cryptocurrencies has come an awful long way. Do not negate how far it's come, and do not negate how much further it's going to go. I'm going to tell you. So this is showing much stability in this marketplace. It's showing an awful lot of power as far as I'm concerned. And it's only going to grow as stability and as confidence in the fiat currencies become eroded. And that's exactly what's happening right now. So now let's go to the Dow Jones Industrial Average. It should have just opened up. Let me refresh the page. Market open, yeah, 65 points down. This is, I think, going to switch as the day goes on today. I think what we're going to see is, a market end up higher probably today. This is what I'm expecting, to tell you the truth. I don't expect the market to end down today. I expect some sort of a reversal later in the day in the market. But we're not talking about massively going up or anything like that, because the market is running between a range. There is resistance at around 26,000, and there's also resistance at 23,000. You know, so don't expect any big moves in the market right now. But I'm expecting the day today to end up. That's kind of what I'm expecting, and there's a reason why I'm expecting today to end up. Now, here is the oil market, and we see a little down, a little slip down. She slipped down over $1 in price. There's probably reasons for this. I haven't really looked it up this morning. I'm thinking it's probably got something to do with OPEC and OPEC not keeping their, what do they call it, their quotas or whatever. Probably something to do with that, why the oil prices slipped off. Plus, also probably a cooling in the geopolitics of war. Probably it looks less like war right now than it did. Things are settling down a little bit. And so also the oil wells in Texas are probably just going crazy because the oil price is over $70. They're probably just going crazy digging over in Texas. Not really, they don't really dig for it anymore. They uncap and they pump pressured steam down and stuff, and they loosen the oil off of the shale oil rocks, and they get the wells going again. And so there's probably an awful lot of wells that are going to come online pretty soon from Texas. It's called the Permian Oil Basin, and they're probably going to bring a lot of wells online from the Permian. So now, cryptocurrency market capitalizations here. We're looking at $332 billion. Can you believe the cryptocurrency has become a $332 billion industry? $332 billion industry? Okay, I know it was a $700 billion industry, and it's come back down to a $300 billion industry, but it's becoming rock solid. I'm going to estimate right now, if you were to cut everything tight, it's probably running about a $150 billion industry right now. But it's a very, very rapidly growing industry, and at a certain point, when the fiat currencies start to fail, and they're going to, because fiat always fails in the end, because ultimately you have to have a backing behind your currency. Now, the dollar was always backed by oil. The Iran oil's futures contract is eroding at that. It's not really something that's going to destroy the dollar overnight, but it's part of the erosion of the petrodollar. These countries are realizing that they're setting up, and they're also realizing that they can bypass the dollar effectively, and that's what they're doing. And so the dollar is becoming less and less pegged to oil all the time. As it becomes depegged, it's going to have a negative effect on the dollar. Also, there's a financial crisis coming up in the near future, and what they're going to have to do is they're going to have to do an awful lot of things that are actually going to erode the dollar even further. So we got big problems coming for the dollar. So let's take a look at some of the better ones of these coins. Bitcoin, they're down. Their price is down on a lot of them, except EOS. EOS is holding its own, and Tron is holding its own. But price is down on an awful lot of these coins. Well, let's see which ones have the best significant price drops. Ethereum's got an excellent price drop. It's down 6%. Bitcoin's got a good price drop. Bitcoin Cash, pretty good. Litecoin, 3% down at 121 bucks. Now, let's take a look at bonds and rates. Now, what we're seeing here is the bond rates are down significantly. The 10-year is below 3% now, 2.975%. This is a temporary thing, I believe. It says breaking. Stocks open lower amid U.S. trade tensions. I'm going to have to go there and find out what these trade tensions are. I thought that the United States and China solved their trade dispute and came to some sort of an agreement a few days ago on their tariffs. So we got to find out what these U.S. trade tensions are. Now let's take a look at the U.S. dollar index today. 93.79 is down just a little bit. Was up, didn't it touch 94? Now it's down to 93.79. I'm expecting it actually to go down to 91 in a short-term interim, but then later I'm expecting it to go back up to 96. That's what I'm expecting with the U.S. dollar index. Now, I'm going to talk about a couple things, a couple issues. First thing I want to talk about is the lira, the Turkish lira. We got problems with the lira. Lira's dropping, values are dropping massively. I'm going to explore this and find out what the problems are, and find out if these problems are going to continue or not. And I'm going to let you know about that in the next couple of days, because it might be in a good value to buy into the lira. If it's something, it might be a hell of a lot better than Deutsche Bank. I'll tell you that much. I got to find out though. I got to learn. I got to do some research into the lira and find out if it's some sort of a bargain right now. I mean, or if they're going to go into a complete hyperinflation and the lira is going to disintegrate and become worthless, and then you wouldn't want to buy into it if it's going to become hyperinflated. It's going to be like buying into the Venezuelan, what's their currency called? It's not the peso. It's a bolivar, is it? Anyway, it's not a good thing to buy into because it just keeps slipping down lower and lower and lower. When they're into a hyperinflation, you don't want to invest in a currency. But if it's just a temporary dip and then it's going to come back up again, well, that might be something to look at. You know, like let's take a look here at welfare too. Now, here's an article I found on Zero Hedge. It's interesting. If I wasn't, I mean, honest to goodness, I got this material I put out here on my site, and I've been talking about certain things like guaranteed income and stuff like that. How I see this as part of the helicopter money that's coming down the pike. And I'll talk about certain things on my site, and then I go to other sites, you know, and I hear them talking about the same things I talked about first, you know. I might talk about something, and then a month or two later, I hear other guys starting to talk about the same thing that I talked about. If I wasn't, I wonder if maybe I'm being paranoid. Are they listening to me or what? I don't know. You know, I mean, I am putting it out there. I mean, they could tune into my channel, these guys, you know, some of these guys. Anyway, here's an article right here on Zero Hedge. It says welfare by another name. And if I scroll down here, they start talking about, well, I'll read a little bit of it. It says, a few smart Democrats, including Bernie Sanders and Cory Booker, have figured this out. Their alternative to Trump's policies is a government guaranteed job for every American who wants one. It's not going to give a job to anybody who wants one. Well, you know, these people that they're going to hire on are going to be absolutely useless. It's actually more work to follow them around and watch what they're doing and make sure they don't make mistakes. I mean, okay, their first day at the office, they come in and they break the copy machine or whatever. Costs the government $10,000, right? You know, if they didn't have them hired on, the machine wouldn't be broken. You know, and I mean, these people are less than totally useless. They're actually costing the government money to give them a job. It costs them money to get them into work and so on, and it's just a pain in the butt. This jobs program, it would actually, because these people are not trained to do these jobs or whatever, they're just going to give them jobs, and it's just like it's all about actually just giving them money. That's what it's really about. Now, I'm going to tell you what, wouldn't it be easier just to go ahead and give them money through a program of when this next recession strikes, give them money through guaranteed income. It's better because that way at least they won't break anything, or they won't get in trouble, or they don't have to get to work or anything. I mean, they're more than useless. If you actually hire them on, they're actually more than useless. They don't want to be there anyway. They're not really trying to do a job or accomplish anything, and the people that are hiring them are just making work. And so it's just a total, way I see it, just a total uselessness of it, of trying to create this work for them, trying to create a job from nothing, to give them this job, basically. And what are they going to do, the government? I mean, are they going to go out and hire, buy a big building and grow the government that much larger so they can give all these people work, bring them into the building and make office cubicles where they do nothing all day. They just basically push papers from one side of the desk to the other side of the desk and back to the other side of the desk again so that they can say, hey, you know what, we got a job. This is all just wastefulness because the job is actually not really doing anything. It's just a job that they're making them so that they can say, hey, we got a job and we're going to pay them. It's better just to go ahead, cut out the middleman, and get right down to giving them money. It says, what happens when the inevitable recession does strike? Tax receipts will dry up. The government will almost certainly unleash a flood of deficit spending to stimulate the economy, and the Fed's current policies of quantitative tightening will swing into reverse. Well, isn't this what I've just been saying? I've been saying that over and over again, how they're going to have to reverse their quantitative easing. Or their quantitative tightening, I mean, and go back to quantitative easing, and how it says it'll swing into reverse. Debt already at a frightening level will spike, but the economy is in the condition it is today because of too much debt and not enough growth. More debt will only make things worse. Central banks have little room to cut rates or print money in future crises, even when the Fed's recent hikes. That's why the Fed is also determined to raise rates so that it can cut them again when it needs to. Well, this is exactly right. Meanwhile, taxpayers have no tolerance for more bailouts, and governments around the world are experiencing political polarization. It is not just here in the United States. There is simply no will and no ability to deal with the next panic or recession when it hits. It says the next panic will be unstoppable without extreme measures. So, in here, what does it say about these extreme measures? It's talking about a basic income. It says GBI goes by other names including universal basic income or just basic income, with the policy the same regardless of the name. The idea is that governments will guarantee every citizen a certain basic income as a matter of right. Everyone making below a certain amount of money gets a check. It is really just welfare by another name, but it would apply to a much broader group than just the poor, and you would not have to pass any income tests or work requirements to qualify. So this is what I've been saying. This is what they're bringing. They're going to bring it. You know, there's a certain number of people out there say, hell no, we don't want no basic income for everyone because it'll make people not work. Well, that's true, but and the big but is these guys that are in power are going to bring it whether you like it or not. And here's what I'm going to tell you about it. They're going to bring it because they have to. It's the last thing that they have to try to stimulate the economy with. It's the last thing they have to try to actually bring the economy up to keep the crisis from happening, is to actually give people money. It's called helicopter money. And I'm going to tell you about this guaranteed basic income. If you're not a big earner, if you're out there right now in my listening audience and you only make like, I don't know, if you don't make more than, say, $25 an hour, right? If you're not a big earner, then this guaranteed basic income, they're going to give these people, just give them money. They're just going to give them more money than you're making right now if you make less than $25 an hour. So you're probably going to find that you will make more money on the guaranteed basic income than you're making at your job. If you got a low paying job. And so it'll be an advantageous to you to just go in and tell your boss, I'm through, and go and sign up for the guaranteed basic income. And quite seriously, you're going to make more money. Staying at home, you're going to make more money. I mean, this is the kind of world we're moving into. This is going to lead directly to crisis, massive crisis. This is what they've led us to. They've led us, this Keynesianism is just nuts. It's absolutely nuts. And they've led us to a sort of world where everything's going to start to fall apart. But I'm going to tell you, when you start to get these guaranteed basic income checks, run to the store and cash them in, because we're going to be into our hyperinflation at that point. That is when the government's going to be, this is their last hurrah. And the dollar's going to be killed. The dollar's going to be destroyed. They don't have any choice. They're probably also going to send out checks for your tax rebate checks, enormous rebate checks in the end, that they're just going to go back and they're going to look through your taxes and they're going to send you back the money that you paid them over the years. They're going to do everything that they can do to try, when we go into this next recession, to try to bring us out of it, because it's going to be a deflationary spike event. It's going to be like 2008, only more severe, and it's going to start to fold. The whole economy is going to start to fold. What it actually amounts to is it amounts to it sucks everything in. It's like 2008, only worse. Anyway, listen, I'm rambling on, starting to ramble. Thank you guys for listening to this report, and we'll catch you tomorrow morning. Bye-bye for now.